Hi, today my partner is Brandon Sheridan, Emery Plante, and I will be discussing Kayak's process throughout its 5 simulative years. So I'm first going to be addressing the first year and the test year of the simulation. Emmerich will be addressing the second and third, while Brandon will be concluding and talking about the fourth and fifth year of the simulation. So let's now talk about Kayak's mission statement, which is pertinent for all of the 5 simulative years. So Kayak's mission statement is to create long-lasting, high-quality, and lightweight kayaks to bring about adventure and an active lifestyle, bringing anyone closer to nature and all the wonders that it has to offer. So let's begin by speaking about the overall ranking of Kayaks within the first year and the test year. So it's curious to see that our company has not been at its best during these years. So indeed, our company was classified as the last team within the competitors' podium, and the test year's bad results were due to the fact that we established an extremely high price compared to that of our competitors. Needless to say, that customers usually go for the lowest price within the market for a certain product, so it was difficult to grow from our mistakes since our competitors were now running and we were still trying to stand up from our fall. This can explain the results for the first year of the simulation. So let's now take a look at the pertinent data which makes up the balance sheet of the test year and the first year of the simulation. So it has been put into a graph, as you can see, and there's also data from 2 years ago which was out of our hands, so we did not input the simulative data for these years. Throughout these years, one may observe that all of the data on Kayak's balance sheet decreased to then increase, so the total shareholders' equity increased overall, which is great, since it means that the shareholders made more money, and as for the total liabilities, they increased, which means our company owned more goods by the end of these 2 years, and unfortunately, our long-term debt increased by the end of the first year, but that's okay since we're making more profit and we'll eventually be able to pay the debt back. And finally, for the total assets, those directly translate to an increase in our company's value. So now the most important data of the balance sheet, according to me, is the share value. So that's defined as the value given to shareholders within a company based on its ability to sustain and grow profits over time. So let's now take a look at the pertinent data which makes up the income statement of the test year and the first year of the simulation. So the important data was put into a graph once again with the data from 2 years ago, which was once again out of our hands. So the total operating expenses, the total financial expenses, and the net sales increased significantly during these years. And throughout the years, one may observe that the gross profit as well as the cost of goods on Kayak's income statement decreased to then increase, but most importantly, the net sales were better than expected since Kayak sold more kayaks than anticipated. The most important data of the income statement from my perspective is the net profit. So the net profit brought about by our company was much better than expected. It was a complete improvement to our test year in which a tremendous loss of $59,950 was generated. And by all means, a net profit of $5,142 is not much, but it is still a significant improvement. So now we can briefly acknowledge that the test year and first year, we were only situated in Canada and it's not possible to expand to a new market, but it would have been foolish to try and do so since we could barely reach the break-even point. So to go over the main factor that influenced these years, the team of Chaos Kayaks was built of 32 employees. Only 2 ovens were available to create our kayaks. And as for the quality of our kayaks, it stays the same for about the 5 years of the simulation. So it was mid-high range. As for the pricing, we had to greatly readjust our price since the competitors just overran us. And as for the break-even point, as aforementioned, we had not successfully attained it during the test year, but it was attained during the first year of the simulation.
To go on, let us analyze the second and third year of the simulation. First, we went from 8 out of 12 to 6. If we compare it to the beginning, it is a net improvement for Kayak. While we compare our data, we can easily see that our net sales increased, which helped generate more profit. Now, if we take a look at the balance sheet, we can understand that assets and liability equities increase as well as the shareholders' equity. Otherwise, the total liability, the current liability, and the long-term debt increased and decreased, which is a good thing since it means that we're paying back our debt. For the share value, we can easily see that it increased during all the simulation, which is a good statistic for our company. To continue, let's take a look at the data taken from the income statement. As mentioned earlier, the net sales increase if we compare year 2 and 3 to the first year, which is again a normal improvement that a business should face. For the cost of goods sold, since we increase our production, this factor followed. Again, operating expense can be linked to the increase in production. On the other side, we could have lower our production cost to increase our profit. The picture says everything. Net profit got better and better from year 1 to 3. From year 1 to 2, we can see that the curve increased significantly compared to year 2 and 3. Of course, following the same curve would have been beneficial for Kayak. In addition to our location in Canada, we decide to expand our production to United States in the Western Territory. As a whole, we decide to cut our expenses during year 3. This is why we decide to lower the number of employees. Following this topic, we did not invest in an additional oven because we didn't think that the investment was worth it. We followed the same decision concerning the quality of our product, which is mid-high range, during both year 2 and 3. Again, our prices stayed the same during the two mentioned years.
Okay, so for years 4 and 5, Chaos Kayaks ranked 7th and 12th respectively. We were a little disappointed to see ourselves go down in the ranks, from year 3 being our best ranking yet, but we didn't lose hope. On the bright side, we were closer to our competitors immediately above us than the ones below us. We believe that having continued the simulation, we could have caught up with our competitors and maybe ended up with a better ranking. I'll be going over some of the important aspects of the 2 years in the following slides. Here we see some of the important values of the balance sheet in a bar graph to see the changes from year 3 to year 5. Basically, the graph shows the increases and decreases for each of the points labeled throughout the years. For our total assets and total shareholders' equity, which is fairly good because this means we increased our company's value as well as our share value. I'll speak more on share value later. For our current liabilities, total liabilities, and long-term debt, we see that they all decreased in year 4, but then increased again in year 5. For year 4, this can be explained by the recession occurring and is why that year wasn't so bad. In addition, since we see an increase from year 4 to year 5 in these values, it can explain our decrease in ranking for year 5. Our share value is something Chaos Kayaks can be proud of for the entirety of the simulation. We see a nice line graph showing our increase in share value, which demonstrates that overall, our shareholders came out with something greater than they invested in the beginning. Although our share value was not close to that of our competitors in first place, we were still in competing numbers with a few teams above our ranking. Here we see a similar graph to the one for the balance sheet, however this one is regarding the income statement. We see that our operating expenses increase, which may have caused our downfall. As for all our other data, we see a fluctuation for the years 4 and 5. Our overall decrease in these values from year 3 to 5 can further explain the struggle that happened in year 5. Here we see how our net profit went downhill after year 3, and it is represented by this line graph. We weren't too happy with this result, however we were happy to see that we still had a net profit in the positive numbers, unlike some of our competitors. For year 4, nothing changed in our locations. However, in year 5, we expanded to Eastern United States. Looking back at this decision, our team regrets expanding because the demand was only high and not very high. We feel that having stayed with only our 2 previous locations, year 5 may have turned out better. This decision was clearly against what was suggested by the simulation because we were just recently coming out of a recession. Here are listed some of the major points in the years 4 and year 5. We had no problems with our employees over all the years of the simulation, and in the end we remained happy with these numbers. Regarding ovens, nothing changed from the previous year 3. Our quality also remained pretty constant throughout the simulation. However, we were on the edge of the high range at one point in our simulation, but couldn't quite get over the edge. For our price, we decreased it from year 3 to year 4, but we re-increased it after from year 4 to 5. This was due to some miscommunication from our team and also caused a negative impact. With regards to targets, for year 4, we needed to increase our net profit margin by 4% and try to have stable sales when comparing to the previous year. We achieved the first target with an increase of 4.3% in the net profit margin. Unfortunately, we didn't attain our second target. We actually decreased in sales by 8.5%, which was a fail on our part. For year 5, our targets were to increase the net profit margin by 8% and increase our sales by 15%. We didn't attain any of these targets. We increased our net profit margin by only 1.7% and increased sales by only 1.6%. However, the overall goal of the simulation was to reach break-even point, and apart from the test year, that is exactly what we did. In conclusion, our journey in the simulation started off slow and ended slightly more improved than where we started. We peaked in overall performance in year 3. We are not extremely proud of our results over time and we wish to have done better. However, to end the simulation off on a good note, we think that having done these mistakes and looking back at our results, we learned a lot and wish to apply what we have learned in the future. Thank you for listening.